Inflation, housing, and market crashes. Everybody's asking that question, what's happening with inflation because interest rates are low? Well, let me give you a couple statistics and just tell you that there isn't going to be a housing crash. This is just another cycle. Things are moving up, down, all around, and they will adjust. But property will continue to follow the historical path of raising in value. Sales of existing homes have actually dropped 2.7%. Where you would think sales would be increasing like hotcakes with people running out of the city, the market is still stable. Prices are increasing outside the cities and throughout the country because of the domino effect that's happening. There's a lot of things happening and giving off the impression that things are going to crash. But let's just continue to look at some statistics so you really understand the facts. Tell you a little bit about, like in the Northeast, houses have fell 3.9%. In the Midwest, the median price is $359,000. That's actually up 11%. In the South, $258,000 average price, up 13%. It's averaging where home sales are 2.7% lower across the board. It doesn't make sense, but these are the statistics. When you have the fear of a housing crash, inflation, and all this kind of stuff, look at the statistics. Let's see what's going to happen. You're asking yourself the question, will it crash? What is going to happen? What's going to happen is that the government has lowered interest rates to help out the economy, and then in the next year or two, they're going to have to help the inflation. Properties will continue to go up, items will continue to inflate, and the economy will continue to grow. We had a setback, but we are not stopping here. We are moving forward. Be positive. A few other statistics. Mortgage levels are going to remain low. Freddie Mac predicts that housing is going to continue to increase at 6.6% per year, which is outstanding as inflation comes back into play. Inflation has been temporarily ceased because of the lowering of the interest rates, which was necessary for the economy to rebound. New millennials now have an opportunity to get in because housing prices, even though they're raising, with interest rates being lower, all they have to do is come up with the down payment and boom, they can get it at a long-term investment at a low rate, which is recommended during this economy and some of the new rules in real estate investing. And the U.S. economy is showing that there is a shortage of almost 3.8 million homes. For you developers out there, start grabbing those property and develop these homes. This is a massive opportunity throughout the country. With all these statistics, you start to really have a feel of what's going on. And yes, you can sit and read about market crashes and things are going to happen and what's going to happen next and politics and all the social poly noise that keeps coming out every single day. Just stick to the facts and remember that real estate holds value and has statistically and historically held value for hundreds of years. If you want to find out more about real estate, check out kenvanliew.com and make it a great day.